The S&P 500 was up 0.23% today, closing at 6890.89. We hit new all-time highs yet again, poking just above the 6900 strike before seeing a little bit of selling pressure coming in at the end of the day. We remain above the 50 EMA on the 15-minute chart. We like to look at this moving average to gauge short-term trends, and of course the trend has been higher ever since we breached the 6700 level last week. We are entering into our upper dealer cluster zone. I noted this in yesterday's video, and the fact that selling pressure could kick in as price trades higher than 6900. So we did see some selling pressure kick in right at the open and then again right at the end of the day. We'll see if that continues into tomorrow. We've got the FOMC tomorrow and the meat of earnings season the next few days as well. So there's a lot going on this week, and it'll be interesting to see how price reacts to all of these external factors as well as the big 6900 level that we're just now hitting. If we scroll up the options chain, we've been talking about the gamma exposure at the 7,000 strike. This continues to be our year-end target. Gamma exposure at 7,000 is becoming more and more prominent. And so being only around 100 points away, it does look like a high probability scenario that we could hit 7,000 by year end.
Thanks, Anthony. Yeah, it'll be interesting to see what happens with FOMC. Even if the FOMC's decision is widely known, the market's reaction can sometimes be a surprise. So let's look at QQQ. QQQ actually saw a very slight dip in GEX today, and GEX moved sideways yesterday. So while we've been seeing this parabolic rise occurring with a lot of distance between the whole moving average and the current price, we're not seeing GEX continue to go up with it. And what's amazing to me is this is the sort of price action you would expect off of a sharp bottom, but instead it's after we've climbed this entire summer. So the B word starts to come in mind. I don't know if I dare say it, blow off. But if we do continue higher tomorrow, I'm watching the upper Keltner channel. That happens to be at 640.67 right now. You can see that matches nicely with this big positive GEX cluster at 640. Now we could stop at 635. Those two clusters are pretty equal in size, and both of them are within this upper dealer cluster zone. That's where we would expect dealers might become sellers. Now, amazingly, 600 seems really far away now, even though we were there just barely 4 sessions ago. But this would be an interesting spot if we saw a sharp pullback. First of all, we want to watch 620. If price action holds 620, we may continue higher from there. If we drop below 620, we could visit 600, and that would probably be a pretty good buy at this point. So let's keep an eye on what happens. We have a few parameters to watch as we enter FOMC tomorrow.
Thanks, Sean. Just piggybacking off of the tech theme, I wanted to take a look at Micron. Micron was up today 0.82%, closing at 221.91. Micron has been one of the laggards in the semiconductor space up until the big breakout we saw early in September, trading from the 120 level all the way up to 220, over 100 points in just a few weeks. And throughout this period, we've seen gamma exposure growing at higher strikes. We see the 220 strike and even the 250 strike as large gamma exposure concentrations. If you look at the options volume today, the largest volume was at that 220 strike, but that 250 strike also had large volume. And so this is actually a position that we have added to our portfolio using a theta decay strategy. We've targeted this 220 strike in the November expiration with the thought that we may see some consolidation around this 220 level, trading around that big gamma exposure concentration. This is also our upper dealer cluster zone. So this is an area where some dealer selling pressure could increase as we trade above 220, kind of locking that price into that zone. So this is a possibility. One of the things that could go against us, however, is if we continue seeing big volume at higher strikes, that could mitigate a lot of that dealer selling pressure that we're seeing around that 220 strike. So currently our view is that Micron is likely to see some consolidation, maybe even a pullback towards the 200 level. But in general, anywhere in this zone, and we are okay with our iron butterfly strategy. And that's a really great example of how we use gamma exposure and options volume to structure our option strategies. By the way, if you want to track our trades in real time as we manage our options portfolio, you can become a member at geeksoffinance.com. You can also get a sneak peek of what we're trading right now by checking out our community Discord. I'll put links in the description below to both of those so you guys can check it out.
Thanks, Anthony. You know, the VIX was up 3% today, but I don't want to look at the VIX too closely at this point because with FOMC tomorrow, it's not a surprise to see volatility bid going into a major announcement. But I did want to point out some interesting shifts with IWM today and some contrasts with what we're seeing with SPX and QQQ. IWM has actually seen GEX decline 2 days in a row, now at negative 605 million. This is certainly not something we would traditionally want to see if the market were to continue higher. In this case, you know, it might be signaling IWM has potential trouble ahead. It could be a contrarian signal given that IWM is still holding the daily whole moving average, which is a positive. So we'll see what happens tomorrow. We're pretty close to this big GEX cluster at 250, and with GEX at 255 and 260, and the other indices continuing to move higher, it's entirely possible that IWM plays catch up to the other two in coming days. So definitely keep an eye on this. I do think 240 is a distinct possibility if IWM continues lower, and that may end up being a signal that the other indices are at risk of reversal in the short term.
All right, next let's take a look at Apple. Apple basically flat on the day, closing at 269 even. Apple's got earnings coming up on Thursday, and after the recent breakout above this 260 zone, market participants are looking at some further upside potential in Apple. Let's take a look at what the gamma exposure and the options market has to say about that. Gamma exposure for quite a while now has been skewed to the upside. You know, the current GEX picture is extremely positively skewed all the way up to the 300 strike. You know, we continue to see options volume coming in at higher strikes all the way up to 300 as well. That's pretty unusual to have this amount of contracts at these outlier strikes trading. Like, for example, you know, over 30,000 contracts trading at this 300 strike today alone. So apparently there are a lot of market participants that are expecting pretty big upside to the tune of 10+% following this earnings release. One note that I would just highlight is our upper dealer cluster zone is sitting between the 270 and 275 strike. So any move above that level, we could see some selling pressure coming in. In general, however, unless we get an immediate spike up to that 300 level, I do think the overall trend and the overall GEX picture looks like a continuation into the year end towards that 300 strike.
All right, let's take a look at Bitcoin. BTC is generally skewed higher in terms of GEX. We have positive GEX that's moved more positive in the last few days, and it's clearly been on the upswing. We do see a large net positive GEX cluster at 120 that appears to be a high probability target. And as long as BTC maintains this steep upward trajectory given to us by the whole moving average, which it's holding still even today with this red candle, it definitely puts that 120 in sight. If we do see Bitcoin continue lower in the next couple of days, I'd like to see it hold 110. You can generally see that we don't really have a lot of GEX below 110, and we do have larger positive GEX clusters even above 120 up to 130 and 140, with most of the volume centered around the 110 to 120 area. So while price is kind of in the middle of the range in terms of the Keltner channels, we do have GEX skewed higher with 120 as a potential target.
And guys, for a limited time, you can get $300 off our yearly portfolio manager tier subscription. Use code FALL2025 at checkout. We've got a few spots available, but this promotion is going to be ending soon, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as as our algorithmic trading strategies, and you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and strategies, and you can also track our trades in real time as we manage our options portfolio. So it's a great resource. You don't want to miss that. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching. We'll see you guys in the next video.